Welcome everyone to today's online panel headed by Moderator Philipp, Achieving Best Price Execution with Crypto Brokers and Liquidity Providers. I'm excited to have you all here. Philipp will present the individual speakers on the panel, but before I hand over, just a quick thing about the logistics. This is the WhatsApp chat as usual. You can scan the QR code, and then in that WhatsApp group, Philipp and I will monitor that. You can ask any questions to the panel as a whole. And if there's enough time on a certain topic, then Philipp will bring up these questions so that there's a little bit of interactivity going on. And if you have a topic that is really interested to you within the limits of this today's theme, then feel free to post them in there. If you can't scan the QR code, then you also find the link to the WhatsApp group in the email you received from Eventbrite. And as always, the speakers and panelists are also in the group, so keep asking questions. We will carry on the conversation even after this short 1-hour event is over. That's it from my side.
Thanks very much. It's a pleasure for having another Disrupt, and it's nice that you're organizing this, especially with many online panels coming up to us, being recommended to us. I think it's still good to have online discussions like this. And actually, I myself always learned new things, and I think the same will be true for today, especially because of the following reason. Today we are talking about institutional crypto trading, right? And that's fascinating because in the past we had crypto exchanges, soon we had crypto custody providers and so on. But apparently we now see the crypto industry, especially Bitcoin, Ethereum and so on, to entering, let's call it a new phase where it's getting a little bit more professional, less retail, more institutional and so on. And then we will also have new terms, new words coming up and new companies coming up. Today, I see, for example, in the list of people presenting the word prime brokerage, institutional trading, and so on. That's exactly words we did not talk about 2 years ago when everything was retail. So for me, this is an indication that things are potentially getting more professionalized or institutionalized. And I think that's exactly what we would like to talk about today. Yeah, maybe let's everybody quickly present himself and his viewpoint on this topic, and also, of course, presenting his company. Today we have here Andy Flury from Switzerland, I guess so, right? He's executive officer from AlgoTrader. That's a software company, basically. Then we have Matthew Long here. He is head of distribution and prime brokerage as OSL. So we also will learn what exactly is prime brokerage here. And we have Neil van Huis here. We already chatted a little bit previously. He is director of sales and institutional trading at Blockfills. That's also basically new industry segments coming up to us. Okay, Andy, maybe you would like to take over and quickly present yourself, your company, and maybe 1-2 hypotheses about this topic where we are going concerning professionalism, institutionalism of crypto trading.
Yeah, sure. Thank you, Philipp. Yeah, quick introduction on myself. I'm originally an engineer, but I also used to be an Air Force pilot here in Switzerland. And then a little later in my career, I did projects for the Swiss intelligence agency, so kind of the Swiss version of the NSA. This was sort of the early days of big data. And then a little later, I was manager at a hedge fund here in Switzerland, where we traded automated trading strategies. Then in 2014, I started the software company AlgoTrader, where we help institutional trading firms to automate their trading strategies. Originally, we did a lot of work in equities and Forex and derivatives markets. And in 2017, we started adding support for the first few crypto exchanges. And obviously, since then, cryptos and digital assets have become a very big part of our business. So earlier this year, we launched a new product called Wireswarm, which is basically a digital asset trading software for the buy side, so for banks and brokers. Here in Switzerland, Signum, one of the first two crypto banks, is actually using that for all their trading. So we basically provide a single API connection to these institutions to access multiple liquidity venues. You know, our view on the market, we focus on the institutions. So we're very happy to see that, you know, the crypto world is now becoming more institutional with banks and brokers and the new banking regulations in the US.
Okay, excellent. Thanks much. So let's quickly also go one step ahead to Matthew Long, talking about prime brokerage. He's working at OSL. You also want to quickly present yourself?
Sure, thank you, Philip. Yeah, so my name's Matt Long. I run distribution and prime brokerage at OSL. We basically have whilst a global footprint based out of Hong Kong and Singapore, run a number of different business lines, including prime, exchange, custody, and we have a software as a service business. Most of my background, I guess, like a lot of people on the call, is traditional finance. Mostly sort of equity derivatives, trading, structuring, again, mostly Pan-Asia. Have been sort of involved in crypto sort of personally for about 3 or 4 years, and then with OSL for about 12 months. Looking at the, I guess what we're seeing on the institutional side, Philip, if you want me to start to move into that, I mean, our business is entirely focused on institutions and has been built to service the adoption of digital assets by institutional customers. We don't deal with retail. We certainly, the way that the firm has been built is, you know, we're listed on the main board of the Hong Kong Stock Exchange. We're audited by one of the big 4 audit firms. We run, you know, full insurance on our hot and cold wallets, and we're in the process of being licensed as well. So we've received approval in principle from the SFC in Hong Kong for virtual asset brokerage and exchange, and we have an application in with the MAS in Singapore. So I guess those 4 points being the dot points as to what we really believe that, you know, institutions look to around security, certainty, regulation in order to really adopt and come into the market. Over the course of this year, you know, we've seen a dramatic change and uplift in new institutions, and I guess when we say institutions, from multifamily offices up, you know, either entering the market with us or starting to learn more about execution into the market. So I might just leave it for there at that for now, if that suits, and we can move on.
Okay, thanks very much. I think the wire to Asia is a little bit thin at the moment. There was a little bit 2 words missing, but this could also be Frankfurt here actually. But thanks very much. So this is a company in the area of prime brokerage seeing increasingly interest. Okay, and last but not least, of course, we have Neil van Huis here from Blockfills. Please also present yourself and your company quickly.
Sure, thanks, Philip. Hi everyone, Neil van Huis here. I'm one of the partners and kind of in charge of sales and institutional trading at Blockfills. We really started our business, and the core concept of our business, in late 2017. Went to market probably very middle of 2018. But the core principle of coming to market on our side was to build prime brokerage into the space. Of course, we're just maybe starting to get there in the industry. But at that time, our early focus to help get there was to build a more professional trading infrastructure, connectivity, liquidity, etc., into the space. A lot of people were accessing crypto through on-ramps or apps. had no idea where they were going to get filled, had no idea where the price of a crypto asset was, or what the liquidity looked like. And so we knew that if professionals wanted to access the space or institutions wanted to access the space, there needed to be more robust liquidity, more transparent liquidity and price, and there needed to be a better form of technology than a UI that goes down every time the market gets stressed and volatile. So we took our experience, which is in derivatives trading, liquidity pools, banking, hedge funds, which is really what makes up our management. And we took an electronic trading platform that we had used in FX for many years, and we made a few tweaks to it and kind of brought it into crypto. So we kind of got well known for being a very transparent, deep liquidity venue at that point, and build a nice book of business that way. In the middle of 2019, we started working very heavily with mining companies to do over-the-counter lending products and structured financial solutions to help them manage their balance sheet. And later on that year, they asked us to build some more structured products that would be beneficial to them in 2020, post-halving and with a new hardware cycle. So today, our core business lines are electronic and over-the-counter execution and brokerage, asset management through derivatives hedging, and managing private investments and fund-to-fund investments. And then lastly, our lending and prime brokerage business, which provides financial solutions, lending, and credit to counterparties globally. So that's a pretty good synopsis of us. And we share a lot of Matt's view on regulation and prime brokerage, and even the software as a service component. We are regulated by the FCA in the UK, and we have a broker-dealer license. We even have tier 1 bank accounts that can do deliverable FX in 20 different currencies. And so I think that kind of makes us a little bit unique in the space to be able to handle FX and handle crypto through a top institution like that. And our goals as we go forward is to provide a real end-to-end solution to the institutional climate as it receives it.
Okay, excellent. Yeah, that's fascinating. And to go directly into the discussion, well, I myself and others here, of course, in the call, I think we have a quite good overview of what's happening in Germany and Switzerland and like Central Europe, let's call it that way. But sometimes we do not really see what's happening in Asia and also in the US, right? So now today we have experts here in the call who do have this knowledge. So maybe you could add a little bit more detail of what's going on in the US these days. Are banks allowed to buy crypto assets or not? Can asset managers invest their clients' funds or not? Is it becoming institutionalized? And this basically would be interesting to know for the US and for Asia. Maybe Neil, directly to you, would you like to add a little bit more detail of what's going on in the US? And also please add detail, how is the government, especially in this case, Trump and Biden, what's their opinion of Bitcoin? Would you expect them to own cryptocurrencies maybe?
Sure. So I'm actually really impressed with the ground that we've made this year. I think that, again, the regulatory bodies have lacked interest in being vocal on the topic. But getting to the point where banks are able to custody crypto assets, and now banks are also able to deal stable coins as long as they're one-to-one pegged to the US dollar, makes things pretty interesting. I think that really opens up an opportunity for the traditional world to bring in tons of product built on stable coins. I think one thing that's really interesting about that for the retail person or any person in the United States is that the idea and the concept of using blockchain technology and digital assets to theoretically unbank yourself a little bit is starting to come into view for me. if you can take stable coins and move your fiat paper money into digital dollars and use products that generate yield that are different than what the bank has been offering you for the last 50 years, rather than whatever the bank is willing to give you, now you can go out and you can use these digital assets to potentially generate a yield that's within your risk constraints, right? And so I think that becomes an interesting play, maybe in the DeFi world in the long game. I think DeFi's got a little ways to go still, but this component of letting banks custody assets in digital form and giving people the rise to a digital dollar is incredibly impressive for the use of digital assets as we go forward. From a political view, that's a loaded question, but I guess the best that I could say is that I really don't see either political leader being very pro digital assets. They haven't really been vocal about it. I don't know that they're very educated on it. And so I think it'll continue to move very slow no matter who's in office. From a perspective of neither one of them, really backing it. But I think that we've made some ground up this year. I'm pretty impressed by that. And I think that in the US, the idea of a digital security is still a very long way off for a lot of reasons. That may be for a different discussion or further discussion, but I think that's probably my synopsis on the US current state of affairs.
That's great to hear. So therefore, apparently, it's all moving in the same direction here and there with a little bit of a different speed. Switzerland being a little bit more speedy than other countries probably, but it's interesting to hear. What about Asia, Matthew? How is Asia, in your opinion, developing? Is it maybe speeding up, accelerating, being ahead of other regions? What are you seeing there this year?
So look, I think there's been a couple of really sort of watershed events this year, particularly as it applies to the regulatory environment, both Hong Kong and Singapore. So just as a refresher, Hong Kong and Singapore outside of Tokyo sort of act as the two major financial hubs in Asia. Throughout the course of this year, or toward the end of last year and through to this year, the securities regulators in both Hong Kong and Singapore released the regulatory framework which will govern virtual assets or digital assets, depending on the terminology per jurisdiction. Therefore, over the course of this year, the DMAS in Singapore has released an ability under their Payment Services Act to facilitate the licensing of crypto and digital assets, and that provides a framework then for for the crypto community to actually take regulation in a major sort of financial hub in Southeast Asia. There's been a lot of applications. I don't think any licenses have actually been granted yet, but I think there's a lot of licenses in for review. In Hong Kong, the approach has been even slightly more robust and really world leading, in that the SFC, the Securities and Futures Commission in Hong Kong, has provided the framework for an opt-in regime to be regulated, opting in, and in doing that, actually regulating crypto firms or digital asset firms under the Securities and Futures Ordinance, and so actually regulating them like broker dealers. And what's going to be sort of very unique under that regulation, and again, we were the first to apply and have received approval in principle for that licensing. There's a couple of really unique things about that framework that are sort of globally unique. So firstly, and of real interest, is that I think the SFC is probably the only sort of major world regulator that is going to regulate crypto and security tokens under the one framework. So the licensing that will be granted or hopefully will be granted by the Securities and Futures Commission, will allow a broker dealer and exchange to offer not only sort of traditional cryptocurrency assets, but also move into security tokens. And so whilst we probably all agree that's the future when we think about the blockchain and the use of tokenization, certainly the SFC has positioned itself to be a significant, or has positioned Hong Kong to be a significant center in that regard. A couple of more things. I think customer segregated banking is also a requirement under the SFC and their regulations. So in the same way that a broker dealer will have customer seg assets, that requirement as well. Probably the other very high level thing that we're seeing here is the really rapid evolution of the discussion around central bank digital currencies, and that the way that China has evolved in its use of blockchain generally, and then the ongoing news about the potential of a digital renminbi, that really provides a very positive backdrop to the whole regulatory environment and the environment for digital assets, not only in Hong Kong and Greater China, but across the region.
Okay, thanks very much. Andy, would you like to add something for the European market, especially with regard to Germany, with the custody license, which is now in place since 8 or 9 months? Did you see like a positive sentiment coming from there? In Germany, very often people still think they can do blockchain without crypto assets or without touching the technology of crypto assets. So would you like to add something here?
Yeah, sure. I mean, it's great to see this custody license in Germany. I think quite a lot of companies applied, and what I've heard, about 4 or 5 have actually received the custody license now. Just at our company, we do see quite a bit of traction coming out of Germany now, more than before. Have been quite a few crypto funds that have launched and been announced this year. We at AlgoTrader, we have, our main office is in Zurich, Switzerland, but we have an office in New York and an office in Singapore. So we're kind of following all 3 regions, and it's been quite interesting for us to see the different developments in the 3 regions. From our perspective, Europe, has a number of banks, especially in Switzerland. We have quite a few brokers here in Switzerland. We kind of have not too many actual crypto exchanges, and if they're around, they're smaller. And in Asia, that's kind of still where the majority of large exchanges sit, with a few brokers like OSL. A few banks now looking into this, especially in Hong Kong and Singapore. And US, from our perspective, has been completely different. Many large exchanges, but really until, what was it, last week or the week before, there wasn't a single bank. So it was great to hear that the US banks, with that decision from the OCC in July, are now able to offer custody as well. And I was really positively surprised that Kraken already received this first license in middle of September in Wyoming. I didn't think that was going to happen that soon. My big question is, when is the first one of the big Wall Street banks gonna have an offering, come up with an offering in this space? That's kind of what we're looking out for.
And the ETF discussion, which is going on since a couple of years, right?
The ETF discussion, but first of all, I don't really understand what's the big deal, and second, I don't think it has that big of an impact on the industry. There's so many other ways to invest in cryptos and digital assets. So I don't think not having or not allowing the US ETFs has prevented any business. But maybe Neil has a different perspective on the topic.
I view it the same way, Andy. I think there's plenty of ways to access digital assets. I don't think an ETF is really necessary, and I think ETFs are a poor product to begin with. And so, with Grayscale having an instrument that you can access through brokerage accounts, with there's many other smaller financial institutions that offer access to Bitcoin through IRAs, like a traditional investment vehicle in the United States. There's a lot of access points that don't include going and opening an account at an exchange. So I'm not a fan of the idea of an ETF. I think it's an attempt at a market share grab by guys who have been in the ETF game a long time that have nowhere else to go with their business. And I'm not a fan of the idea. And I would just kind of echo Andy's sentiment of, being a little bit surprised about how quickly there was a turnaround time on issuing a license. But the one thing that tipped me off about the evolution of the US market was Coinbase's announcement for a public offering. You can't tell me for a second that they don't know every little bit of what's going on in the US regulatory regime. And when they announced the idea of going public, you better believe they know what the regulatory regime looks like, them and Kraken both. So I feel pretty comfortable saying, now that we heard that announcement, that there might be even more to come on the regulatory side from the US.
Okay, fascinating to hear this. So, last question about financial instruments here. What's your opinion about crypto indices? Because probably you should also not be like the biggest fan of index products, especially with Bitcoin being so strong that basically Bitcoin is the index, right? Would you agree or would you disagree?
If we're going to talk about decentralized assets and how these are stores of value, the more you mix up these things into more sophisticated products that the average person doesn't understand, the more you transfer wealth out of a decentralized community into a centralized community. So in my opinion, again, I would prefer to see people access digital assets at their leisure and upon their risk appetite. I think that the more you build in, the idea of a pure indice play doesn't bother me too much, but I don't want to see weighted products that get complicated for the average person that comes in the form of an ETF. It would have to be a very pure play to me. Otherwise, I feel very much so like what you have in some mining instances. For example, there are a lot of guys that mine Zcash to transfer Zcash mining rewards into Bitcoin, right? And that's the only purpose that they mine Zcash. And so to me, what they're doing is they're getting a community of people to buy Zcash while they sell it to them, just so they can move that into another asset, right? And so to me, that's a destruction of value, and it moves wealth creation into centralized hands. So I guess that's my thoughts on that.
So that's an interesting point, because apparently, I guess you also know EOS, and EOS, apparently what I have heard, is a similar strange construction, because EOS is one of the largest holders of Bitcoin. So if you invest in EOS, you indirectly invest in Bitcoin. They are holding it for you in a centralized way and also don't know exactly what they should do with it, right? So that's basically a related discussion. One interesting question, I think it should be interesting for everybody here in the room, in the call, is: do you see any room that governments would forbid Bitcoin entirely? Like, we know that India is a skeptic of Bitcoin, right? But do you see this happening in Asian countries or in the US or even in European countries? I myself see that you can rule out this decision to forbid Bitcoin at this point of time, right? Would you agree, or would you see that there is a risk of basically trying to get entirely rid of Bitcoin?
I'm happy to have the first crack at that one. Look, I think, you know, we're in a risk business, so I don't think any of us would rule out the sort of a very tail event happening that a government does try and do it. However, it's hard not to think that the genie is well and truly out of the bottle. You know, it's hard to see how the prescription by one government would change the way that the interoperability of Bitcoin and other digital assets, you know, now operate. I also think that there is, you know, with what we see with FATFA, with travel rule, with you know, embracing by, you know, just this week with the EU releasing some guidelines, I do think that the groundswell is the other way. You know, if anything, there's positive acceleration with respect to government and regulatory adoption of digital assets. So I think, look, I think the genie's out of the bottle.
Neil, you want to add something? Do you see that the US could basically entirely forbid Bitcoin and other digital assets of this kind?
You know, I don't think so, because kind of just the way Matt put it, you know, I think the genie's out of the bottle for the most part here. You know, if you're going to start going down the road of digital dollars and you're going to accept digital currency as a form of future payment, right? Because there's no question digital assets are here and are going to disrupt the payments business forever. I mean, there's blockchain technology at a minimum is going to disrupt payments. There's absolutely nothing necessary about PayPal charging 2.99% plus 30 cents on every transaction ever made, when blockchain technology could secure a payment enough so that there's no chargeback risk, right? Because that's essentially what they're charging you for. And so if the genie's already out of the bottle there, you know, how are you going to let a decentralized currency not try to exist in that digital world? Yeah, so I don't think so. If I were to bet, that's what I'd guess. Andy, what about you?
Yeah, I think you know, this whole topic has just gotten too big. You know, by now, you know, if we look at the market cap, you know, that's not too big, 350 billion roughly. But you know, if we look at the trading volume, we're around 100 billion per day. To put that into perspective, the NASDAQ does about 200 billion per day. So you could say crypto assets are about half of US tech stocks. And you know, that's just too big for any country to say, no, we're not going to allow it.
Yeah, additionally, if you look at it from a technological perspective, I know that some people would disagree with what I'm saying, but you could say that the way towards digital assets, the digital euro, and the way also towards the digital dollar are passing by crypto assets because of the technology. Because if you would like to store technologically a digital security in the future, or a digital dollar or digital euro, then it will be the public-private key architecture, which is and has been invented, and also which is further being developed by crypto assets and advanced by the Ethereum community, for example. So that's also one technological reason why the way towards digital assets is passing by crypto assets, at least from a technological perspective at this point of time, right? Okay, interesting points. Andy, tell us, please, what is a broker doing in the crypto assets market, and why do you see that brokers and market makers are having an interesting business model over and above traditional crypto exchanges, let's call it that way? Why are these business models of brokers and market makers different from crypto exchanges?
Yep. Take a stab at that. You know, what's the business of a broker or a market maker? Well, let's start with a broker. You know, they're here to execute large orders at the best possible price. As we know, the crypto landscape is very fragmented. There are over 350 exchanges, I think, today. So you could kind of look at this crypto landscape like a network of liquidity sources and consumers. So if you're a large institutional player, a hedge fund or a pension fund, and you wanna buy a big position of Bitcoin, you can't just go to a single exchange and place a market order. The slippage. So basically, the price you would pay would be much higher than the price you currently see on the exchange. So you have to work with multiple exchanges, split up large orders, and that's exactly what a broker does. They make sure that if you're a large buyer or a large seller, that you're not paying too much. Another big difference from what we see is especially here in Switzerland, where banks are now looking into offering cryptocurrencies as well, is that crypto exchanges they require pre-funding. So that means if you want to trade on an exchange, you have to deposit assets before you can do that, and that's a big problem. If you're trading multiple exchanges, let's say you're trading 10 exchanges and you're trading 10 coins, that means you'd have to have 100 balances, spread over these exchanges, and that can get very big quickly. And so, with the brokers, that's different. Brokers typically support post-trade settlement. So you can, for example, with Blockfills, with Neil, you can trade with them during the day, and then at the end of the day, you do a post-trade settlement. You send your fiat, you get your crypto back, but at no point in time do you actually have to deposit your assets with them. So that makes it much easier for large institutions to trade with brokers and with market makers.
Okay, excellent. Neil, do you want to add something on this, or Matt? How important are brokers in addition to crypto exchanges?
Yeah, I think also there's a component of service that comes into play with brokers that you don't get at the exchange level. If you go to Coinbase and you're one in 30 million users, right? You're just another guy that's there. You're not getting any real service. If you've got an issue or you're trying to make a deposit or withdraw, there's a lot of problems that you might run into while participating at the exchange level. What you're going to get typically from a good broker is a level of service and professionalism that would come along with, something of a service that you're paying for, right? And the broker is, maybe making a little bit on the trade, but he's certainly saving you money on the trade, right? And so all in all, you'll come out ahead, and you'll usually get a very professional service on top of that looks and feels like something you'd get out of a traditional wealth manager, broker, banker in the real world, just in the digital asset sector. So I think that really goes a long way when you're trying to work with professionals and institutions, because they simply want and expect that service as a call it a more active or larger purchaser or seller.
Maybe there is also an interesting, distinction between a broker and a prime broker. I hear lots of confusion around these two terms. Maybe we can elaborate on that also a little. Like, to my perception, that the term prime brokerage didn't really exist until this spring. You had brokers that would basically facilitate the trading. But then in May of this year, you know, Coinbase and Gemini and BitGo all announced prime brokerages for the first time. And, you know, so, you know, they're basically going to offer, like Neil said, additional services to their client in addition to the trading. You know, things like borrowing and lending, financing, mining, staking, but also capital introductions. You know, that's kind of what the big Wall Street prime brokers have been doing for decades. So you could kind of view as a you know, a prime broker as like a concierge service for institutional players. You know, you get everything you need from one broker.
Okay, very interesting. So this is basically then especially interesting from an institutional side, of course, or for yeah, for the entire segment, except retail. But maybe you add a little bit more detail, Andy. What's your opinion about crypto exchanges as we know them in comparison to decentralized crypto exchanges? You know, is this something which will grow in the future? And how would you put this into perspective with the broker business model, which you just have presented?
Well, you know, as I said, there are many crypto exchanges these days, and you know, they are typically tech startups, right? So they're not, you know, you can't compare most of them to the traditional national exchanges. And now, you know, we have you know, these decentralized exchanges, and especially this year, they have gained a lot in popularity. And I'm, you know, very interested in following these developments just personally, because I find it incredibly interesting. You know, things like Uniswap and Curve, for example. And, you know, what I find extremely interesting is that, you know, for decades, all exchanges around the globe, they basically work the same way. You know, they use what's called a central limit order book. And that's how price discovery works. And now these decentralized exchanges, you know, with Uniswap being the first one, they found a completely new way for price discovery. And this just, in my view, just started a whole new, you know, trend of innovation. You know, I think that's not the end of the story. There will be much more. So for decades, we've seen central limit order books, and now all of a sudden there is new ways, you know, to provide liquidity, to trade for price discovery. I think right now this is still in the early stage. You know, I haven't really, from our clients, I haven't seen an interest in working with those decentralized exchanges yet. It's maybe also because they're quite expensive compared to centralized exchanges. But I definitely see a trend there, and you know, I could imagine that this will also become interesting for institutional traders.
Okay, very interesting. So we see an entire breadth of, let's call it, of possibilities on how to take your fiat currency and invest it in cryptocurrency. So to basically summarize it again, you have, of course, crypto exchanges. That's pretty much well known. Then we have upcoming decentralized exchanges, which are expensive, but at least growing, right? Then we have, let's call it, legacy exchanges in such as Börse Stuttgart, SIX in Switzerland, or Deutsche Börse, which are thinking or doing projects in the area of crypto. Then we have index funds, as previously discussed. We have ETFs also, and then finally we have brokers. So that's a huge breadth. So what would you recommend, easily, everybody of you, what would you recommend in case somebody would like to invest, say, 20 million euro in Bitcoin or Ethereum, let's call it the top 3 crypto assets? What should this person do? Should he go to Binance? Should he go to Bitfinance? Should he like open up 10 different accounts to spread the risk? Should he purchase bankable assets such as ETFs? or what should this person be doing? Because most probably he would also not take 20 million and simply go to one broker. He would probably do, for risk reasons, maybe approach 2, 3 trading facilities. What would be your recommendation here?
Happy to jump on that. I think Neil and I are going to make the same point. I think maybe you take the first point last. Look, I think there's going to be a couple of approaches to how you put a $20 line into the market. That's business as usual for us on our OTC desk to put a $20 line into the market for a client, facilitate it for them, and either keep the line in our insured wallets or book it back out to their custodian. So I think that's kind of business as usual. I guess there's a counterpoint to that, and so if you look at the way that MicroStrategy put I think $400 into the market over the last month, that was done. I don't think that was done through OTC desk specifically, but done electronically. Neil might be a bit closer to that one than I am, but that was done electronically over a large number of, looks like sort of a TWAP order or something across a couple of days, and have taken that approach. How I think the approach that you said person, I think it's that investor takes is also going to be determined by what their mandate is. So depending on what type of investor, if it's a fund, what does their mandate say? What does their what does their auditor require? That can also impact how they're going to execute, what they're going to buy, where they're going to keep it.
Okay, interesting. Who else wants to take this question?
Yeah, feel free, Andy, if you.
No, go ahead, Neil. Fine.
I was just gonna say, yeah. I mean, Matt's right. I echo a lot of what he says. I think that there's a lot of ways to enter the market with a big order. Certainly a desk like OSL could fill it. Certainly a desk like ours could fill it, or several other desks that are out there. Really, the approach a lot of us can take is just managing an order and how to break that order up properly to not disturb the market. Many of us might do it over time, and we've handled several one-click $10-20 million trades without ever moving the market, right? So I think that if you go onto an exchange as a participant, you're going to need help. There's guys that handle smart order routers, but many of us already have that as like internal technology, right? And so I think that Matt's right. There's a lot of different ways to do it. MicroStrategy had an interesting one, which, like you said, was broken up over, I think they said it was like 30-minute orders. In some scenarios, I think he commented that if there was a drop, they had 50 million in dry powder that they were willing to bring into the market, to pay through the market to get a good deal. So there's a lot of ways you can aggress into the market to get what you wanted to get done. And there are guys that quite literally will pay to aggress because they're looking to jump on the move as it's happening. There are other guys that are leaving a couple thousand lot order somewhere in the book for the market to come down and get it, right? But one thing I can tell you about market makers and trading and liquidity in general is you'd be blown away if you watched an order of that magnitude go through the market and watch it primarily in many situations go right against the person who just got filled. The way people in this market distribute liquidity and handle orders of that size to manage risk, it's extremely impressive to watch, which shows you that there's a lot more liquidity in this market than maybe meets the eye, and people don't give this market enough credit for. But it also shows you that there are some serious players that you can probably count on 2 to 4 hands that handle this market, and outside of that, there's not a lot more. So that's kind of my 2 cents on it. It's the liquidity is very centralized. And so from a decentralized exchange standpoint, I'm impressed with what they've been able to accomplish recently, getting, changing the way liquidity comes about. But generally, liquidity is very centralized. And so we'll see, like some of these things that Andy said, that they've found as ways to get people interested to bring liquidity in. But we'll see how that lasts, and we'll see what changes need to be made over time to keep that liquidity persisting on those platforms.
So this is basically an interesting opinion towards the evolvement of DeFi as an, let's call it, liquidity machine, right? Providing the right incentives. So this will be fascinating to watch in the next year. And you would like to add something on this, especially with regard to best price guarantees and smart order routing, how this is related towards large orders?
Yeah, let me maybe add just a bit of a theoretical part, for some of the listeners today that are maybe not as deep into the topic as all of us are. To your original question, for such a large order, 20 million, 50 million, you definitely want to work with a broker or a market maker. Don't try to execute that on a single exchange. Now, when working with brokers and market makers, there are the two terms agency trading and principal trading, and I think those terms are quite important. If you go to a broker that works on an agency basis, what that means is that broker will take your order and work through that order on your behalf. So he works as an agent for you. Now, if you go to a broker that works on a principal basis, that means that the broker is taking the other side. If you want to buy a Bitcoin, he's going to sell you Bitcoin out of his own inventory. Both exist. Both have their reasoning. Now, to actually execute such a big order, there is in principle two ways. One is to use a so-called execution algo and the smart order router. So things like a TWAP, time-weighted average price. Now, how does that work? So that's a piece of software that will chop up a large order into smaller chunks, right? Randomized. And then for each order, the algo with the smart order route will then seek the venue that currently has the best price. And that might change over time. So the algo will try to execute that order over a period of time and try to achieve as minimum market impact and slippage as possible. So, if you're a trader and you have time, you're in no rush, that's usually the best option. Problem is that when you issue such an algo, you don't actually know beforehand what you're going to pay because the price, of the market might move. So the other option you have is to use something that's called an RFQ, request for quote. And that's how a lot of the brokers and market makers operate as well, is you can ask them, I want to buy a Bitcoin worth 20 million, or I want to buy, let's say, 100 Bitcoin. What do I have to pay? And they give you a price, and then you can say, accept or decline, and beforehand, how much you're going to pay. So you don't have a timing risk, right away what you're going to pay, and that's obviously an advantage. Now, that service, the broker, the market maker is taking a risk because he's giving you that price. That doesn't happen for free. So there is a margin involved in that. So if you're, either in a hurry or you want to know, how much you're going to pay beforehand, then the RFQ option is probably the better option. With what we do at AlgoTrader, we support both technically with our software, and it really depends on the client and the requirements. What makes more sense for each client.
Okay, that was a good summary. Excellent. Yeah, so maybe to close this session very soon, let me check if there have been any questions from the panel. Yeah, and this is basically related to Tether. The question has been posed a couple of minutes ago. So first of all, to really get this question in the right way, the first question would be, would trading be much more efficient if you would not just have crypto assets on chain, but also traditional currencies, in specific something like the euro or the US dollar, such as Tether, right? So once you have these currencies on chain, then you would not need on-ramps, off-ramps, because everything is on chain, and then trading would be much more efficient. Would this assumption be right? And if you quickly have answered this question, then the next question is coming.
Matt, go ahead.
I think we probably all agree that the probability of central bank digital currencies coming in the next 5 years to 10 years is very, very high. So the concept of actually trading digital euros, digital dollars, in that sense, the questioner has asked, I think that the probability of that occurring is very high.
Yeah, and I would just add to that, that's such a fascinating thing to think about. If you sit back, it is completely against the traditional banking model for everyone in this room's lifetime, right? Their job is to keep your money in their hands for as long as possible and do whatever they want to do with it. So the theory of on-chain currency that is fungible against a number of other asset classes in essentially real time is fascinating. So I just wanted to add that point.
Okay, excellent. So, and now comes the follow-up question. What happens if Tether is getting into trouble due to regulatory concerns? This question is also rooted in the fact that the European Commission yesterday has launched or proposed their crypto regulation, which they call MiCA, Markets in Crypto Assets. And here, Tether would need to be regulated business in the form of either an asset reference token or an e-money token. And if they would not be able to comply with it, then at least speaking for Europe, you could not work with Tether anymore in Europe. That's basically up or out. Either you do regulate yourself, then in 2 years, 3 years time, as a currency of this kind, as a stable coin, or you're out of the market. So what happens then if Tether would be forced to go out of the market because they would not be able to regulate themselves given their history and their background? What's your opinion there? Is this dangerous for the market?
I think just another stable coin will take over. We'll just see a shift. There's so many alternatives now. Those are much closer to regulation. And Tether is being traded so heavily. I don't know if people are aware of this. Tether is the most heaviest traded digital asset today. Typically, each Tether is traded 3 times per day.
Interesting.
So
yeah.
I think it is just going to shift to another one.
Yeah, I think I just heard a note that Tether does more transactions a day than PayPal now, which is just mind-blowing. And furthermore, I think that your point on another stablecoin emerging is exactly that. To me, that statement by the EU sounds a little bit self-fulfilling. It sounds like they'd love to push Tether away just so they could have their own little stablecoin. That's what it sounds like to me. And here, we'd love to get you out of the way because we'll just create another stablecoin that's native to us.
Excellent. That's nearly a very nice closing word, because I would also agree that that simply with regulation coming, there is some kind of up or out logic. Either a stable coin of a new kind will basically be compliant with regulatory efforts or requirements, making it a real stable coin in a currency, or they might be driven out of the market. That's simply a competition going on. Therefore, actually, I don't see a risk that Tether would go out of the market due to regulatory requirements. But of course, Tether can still be some kind of systemic risk at this point of time, right? Okay, let's close this session at this point of time. Thank you very much. Actually, I learned a lot. I asked the questions which you have discussed previously, but I also asked those questions where I thought, let's try to learn. from this new type of market in the institutional area, which is now slowly growing and steadily growing. Thanks very much and have a very nice day.